Shares in Asia Pacific are in the positive territory as investors react to higher than expected inflation in China. Producer prices in the country rose 8% year on year against an expected increase of 7.7%. The data comes as China battles its worst COVID outbreak since the initial phase of the pandemic in early 2020. Analysts say consumers are stocking up on supplies, driving up domestic demand for goods and services. The Shanghai Composite is up nearly 2%, and the Shenzhen component is nearly 3% higher today. Meanwhile, US stock futures are also higher ahead of a key inflation reading. Mega-cap technology names such as Apple and Microsoft led gains Tuesday after struggling through the last 4 sessions. For more now, let's go to Craig Erlam, who is OANDA's senior market analyst. Craig, many thanks for being with us this morning. First of all, this key inflation data that we've seen coming out of China. We know Beijing is sticking to its zero COVID policy. So what is this pointing at? I mean, are people spending and stocking up before other lockdowns, or is this a real inflation? Can inflation keep rising in China?
Well, I think there's 2 key takeaways really from the data. The first is that we are seeing lockdown-related issues in regards to supply chains, and it's kind of one of the stories of the pandemic over the last 2 years. Is when we've seen these lockdowns, we have seen higher prices and supply disruptions as a result, and we're seeing that clearly evident once again in China. And with the restrictions still being extremely tight, and if anything increasing rather than decreasing, you expect that this is going to continue to be a feature of the inflation data in China now over the coming months. The second key point is the core inflation data. Now, this is the data that strips out fuel, which of course is extremely expensive right now, and food. And that actually dropped last month and has been on a downward trajectory. Now, that's important because that means that the Chinese authorities are going to view this as a sign that they do have room to ease monetary policy in order to try and support the economy through this transitional period. So I think both of those points are really important, and the key takeaways really from this data. The difficulty for these authorities, of course, is going to be trying to generate economic growth at a time when we've seen slowdowns at the start of this year, but also at a time when they're trying to deal with a property market that has been extremely unstable for the last 12 months that they don't want to further destabilize.
Interesting, Craig, that they might start easing monetary policy at this point in time. Today's release in the US, I mean, the Consumer Price Index, is it really going to be the latest temperature check on inflation? What are you expecting from today? And is a rise of 0.2% from the previous month plausible at this point?
Yeah, the US situation, it really contrasts with what we're seeing in China. In the US, we've seen extremely high inflation now for many months. In fact, the moves that we've seen, the rise to 8.5%, has been far more aggressive than many anticipated even 6 months ago. But today's inflation data is so important, especially as you've noted from a market sentiment perspective, because today we're hoping to see the first sign that it's actually starting to decline. Inflation was expected to peak around the March-April time, and we should see from the inflation data today that that is going to be moderating somewhat from around 0.8% growth, I think it was last month, to 0.2% now. That should have an impact on the annualized figure as well. And this should be a trend that we start to see materialize now over the summer. This is the first sign of how much inflation is going to fall and how fast it's going to be. If we see something more like 0.4, 0.5, then we could see that have a really damaging effect on sentiment once again in the markets, because that would suggest that inflation once again is a far greater problem than what many have anticipated.
Absolutely, Craig. We're absolutely going to keep a close eye on US stocks today after the bloodbath we've seen in the last sessions. Many thanks for being with us today.